Retirement. It's hard to come by, but everybody wants it. And especially now in a recession, bear market, how can you get the most bang for your buck and not be as risky as crypto? Well, you got to go with some index funds and high-paying dividend stocks that, again, have some low risk. And what do I mean by dividends? Dividends is profit sharing from a company. When a company makes money, they give back a percentage to their shareholders, and higher is better, right? So the first guy I'm going to talk about is Enterprise Products Partners. And these guys are in natural gas, crude oil, petroleum. And they have 50,000 miles of pipeline, and their dividend is 7.6%. You might be going, Johnny, well, electric vehicles and solar, that's just kind of where it's going. 96% of all artifacts made around the world use petroleum at some point in the creation process. I'm talking about cosmetics, cleaning products, plastics, medicines, even energy materials like solar panels and batteries, asphalts, electronics, TV, cell phones. You see where I'm going with this. This industry isn't going anywhere for a while. But the key thing I want you to look at is the dividend, the 7.6. Yes, I know I said that. If I look back at the chart, we are in a rising market right now. We've got a lower high. Here's even a lower high, and we potentially could make a higher high back up here to $26 or so, because it opened at 25 and right now, 25.8. Now it's at 25.7. It's got like a dollar range where it goes. 52-week high is $28. 52-week is $22. We're within 10% of its high. So it's fairly safe just because we're in natural gas. And what's important is that dividend. So if I'm saying, hey, your retirement account is not 1,000, not 10,000, not 100,000, but $1 million, right? We're going to just times that by 0.076, and it's $76,000. You're getting $76,000 a year just by having $1 million worth of this Enterprise Products Partners. That's number one, as far as a high dividend paying stock that is boring and fairly safe. Moving on to number two. DFP for short, Flattery and Crummarine Dynamic Preferred and Income Fund. Basically what this guy is it's an index fund. It's like a mutual fund, just low fees. And it's invested in a lot of different sectors. You've got 59% bank sectors. You've got 20% insurance, 7% energy, 5.6% utility, 3.4% finance. It's a fairly real estate investment trusts, 1.5, communications, 1.5. It's fairly diverse. And what's cool about this guy is it is also in an uptrend. We are seeing a higher low right now and potentially then another higher high. And I'm on the daily right now here. So it has been pumping up, which is nice to see. And it's 7.6% dividend paying yield. So if you have $1 million, you're still making $76,000. They're incredibly close to each other as far as dividends. The 52-week high on this guy is $26. The 52-week low is $18. And that is quite a bit lower. However, the interesting thing here is interest rates have been rising. The economy has been tanking, and Bitcoin and those kind of cryptocurrencies are down 80 to 90%. You've got Facebook stock, other guys that are down like 60%. This isn't that far of a decline, and you're still making a high percentage dividend here, which is important for retirement and even young folks that if you have some money that was left over, because when you're playing with dividends, the bigger number you have invested, the better number you're getting back. So this is Johnny Crypto. I'm here to help you guys make some money, whether it's stocks, investing. We'll talk about all sorts of different vehicles, custodial accounts, 529 plans, Roth plans, all sorts of different stuff that I talk about on this channel. But Appreciate every single one of you. I appreciate the subscriber boost. It's helpful. Till next time. Thank you again. Said that twice.